This video will cover how to take a retracement trade. I took a trade on Euro USD and I'm going to use it as an example to explain how you can go about taking a retracement trade and be profitable. Before I place a trade, I was able to share the setup with the community. I have a free Telegram group you can join where we discuss and send setup before we take a trade. Now let me show you this setup. So this is the setup I sent, and I was expecting price to come into this internal range liquidity. So here is when I sent my first TP and second TP and telling them that they should look out for this inverted fair value gap and see how price will react at those levels. And then this was my trade entry. So let's go to the chart and see how someone can take similar retracement trade. So before I took this trade, I start with the daily time frame and I determine the directional bias on the daily time frame. Now we see price is bullish because we see price coming into internal range liquidity in form of fair value gap, and then price is respecting change in the state of delivery, and we see this expansion. I also consider the candle closure. We see price is closing above previous day high, and yesterday we see that price closes above this previous day high. So what I have in my mind is that I will be bullish, but I want to see price coming into discount level before I buy. We see that price came back into discount level before going bullish. We're going to use the previous day candle to frame our trade, and since that price has closed above the previous day candle before the yesterday candle, we know that price is going to be bullish. All we need to do is to position ourselves to see price to come into, and that is where I took my trade. Price coming into the 50% of this week is my trade. So I had this level in mind because the 50% of the week is the consequent encroachment of the week, and price can easily come into the level. So I had this point of interest in mind. So after daily time frame, I moved to the 1 hour time frame, and all I had was this fair value gap here as my draw on liquidity because we took out external range liquidity yesterday, and during London session I saw that price has created this rejection that started from the Asian session. So what I did was I am expecting price to come into this level because we see price in the Asian session was respecting this previous candle, which is the candle one of the swing high. So we see price respecting, and then we see price displacing bearish, creating this closure below this low. As soon as I saw this, I know that the draw on liquidity will be this fair value gap. And this was my retracement trade. How is it a retracement trade? Because we are bullish. Price is creating higher high, then we need to have a higher low. Then my trade came at retracement. Now, one of the things I want you to understand is that whenever you have an expansion, when price expands, there is every likelihood that price is going to create a consolidation, and then price can continue bullish, or a consolidation, and then we will see a manipulation, then we'll see a reversal. Or what price will do is that when price expand, price can retrace into the 50% or below the 50% of the range for another expansion. So what we see here is that we see that price created an expansion and then a retracement, and yesterday too the same thing happened, expansion and retracement. But here previously we see an expansion, then consolidation, the expansion. So whenever you see price expand, price is going to consolidate, price is going to retrace, or price is going to reverse. And when you see price is reversing from a point of consolidation, that means it's a manipulation. And what we see here is that we have some level of consolidation here, and we see price reversing, and that was a pure manipulation. So this is the 5 minutes time frame, and what do we have on the 5 minutes time frame? We've seen that price has created this consolidation, and all we see that price sweep liquidity above this high, a tiny one, and then we see price break structure here. But to use time, we consider time before price. If you look at it, this happened not at the kill zone, that is London key zone, but all we had was during London key zone, we see this displacement bearish, and we see price closing below the Asian low. Now, relating it with time, we had our time here. Now this retracement is where I positioned myself and I took my trade here. Now I wanted to look at this. I also used the inversion fair value gap, that is inverted fair value gap. Here is a validated fair value gap or a failed fair value gap. Look at how price came into the level. And another one is that we have this fair value gap also here that was violated, and we see how price was respecting here. But I preferred the first inverted fair value gap, and we see price came into it. So at this time, as soon as I see price coming into this level, all I did was I want to see price rejecting from this level, and you see price sweep liquidity inside the inverted fair value gap and close inside the range. So what I did was I went to the 1 minute time frame and positioned my trade at the 1 minute time frame. So on the 1 minute time frame, you see we have this sweep of liquidity, that is total sweep, and we had this break of structure here. So as soon as I see this, I know that price is going to be bearish. I had my sell trade here and my stop loss is above this high, and then I targeted this fair value gap. Now during